Good morning, everybody. It's 9 o'clock on Wednesday, May 26th. Just want to run through the morning charts of gold and the SP 500. Here we've got the Kiko overlay chart. Yesterday we saw gold sell down and then continue to step its way higher. The previous day we had this resistance level, this peak formed. It was stuck under there early in the morning yesterday, and then it popped above it, rode on top, and then it actually stepped up onto this level and continued to go higher. And if you carry this line through, you can see this resistance. Now it's trading on top, so now it's acting as support, and now it's had a nice push up this morning and is having a nice bull flag down. And this is good bullish action. We want to see these strong surges on volume, which I'll show you on the intraday chart, and then these pullbacks. It could very easily pull back down and bounce around down here on top of this level, and then possibly make a run up into the close or in a day or two. So this is good price action. Nice thing is both the trends for the past couple days have been up, so it looks like we're going into a time when we should see gold push up more today. Around 9:30 or 10, and it'll help put us in our favor. I did send out an alert last night, late last night, just saying to take some money off the table on gold. We don't have a full position, but it doesn't matter. You should still take a little bit off the table. All it's going to do is put a small profit on in your account and lower our overall risk in case gold pulls back sharply. What I see here is pretty simple. It was trading right into resistance, into this middle of this range, which acts as a key resistance level. And I sent out that price was 1204. Take some money off the table. So if you got that alert when you woke up this morning, you're actually going to get filled at a premium, which is trading right near the top of this past spike and through this noise here, which is another resistance level, and it's actually doing a little flag. I'll show you on a shorter term chart. You can see the bull flag that it's forming with some good volume action pre-market. So we want to take a little bit off the table. Don't sell your entire position. The whole point of this strategy is you scale out at these resistance levels. You take a little off the table, which puts a small profit on. We move our stops to break even, and then we just let the trend continue to work its way up. So that's what we're looking at now. If we zoom into the 10-minute chart, even the 5-minute chart shows it really nicely. You can see this morning volume pretty much went from very light and slowly ramped all the way up, and with that we also got a nice rise in price and very bullish price action here. Now we're getting a bull flag, and it was holding up actually pretty good with some volume this morning. Eventually it did just pop down, but still very bullish price action. This is the time of the morning when big volume steps in, so it will start to get a little choppy here. But overall, the trend is very bullish. Rising prices on rising volume. It has a nice bull flag forming, so we could see it pull back down into this support level today. It could just drift down, but then I think it's eventually going to rally back up, and we'll see it move higher. So that's what I think is going to happen with gold. Right now we're sitting in a nice position with that. As for the SP 500, yesterday we got shaken out. It was a pretty crazy shakeout. Looks like the market just pulled it down throughout the night and triggered everybody's stops. There's some panic selling in the morning, which flushed out even more, and then it just reversed. There's some heavy buying coming back in. Anyways, that formed a I call these candles here tweezers. You get these long spikes down. Usually when you get long spikes down, it's usually a reversal point. You can see them all in the past, and so I do think the S&P has got a good chance to run into the 1130, 1140, possibly 1150 area. I do want to get us in. I'm going to show you on the intraday chart real quickly here why I feel there's a little extra risk right now. Those of you who are more aggressive can get involved, and who are going to manage. You got to manage your money when you jump in on these higher risk trades. You've got to be very disciplined to just cut your losses, and if it starts to go against you, or get out very quickly and wait for a better setup. But in short, what happens is we get all these spike volume spikes in the down here. Each clumps of volume are the actual trading days, 9:30 to 4 o'clock. The light volume sessions in between, that looks like there's no volume. That's after hours trading. In short, in a downtrend, which we are in now, although I do think the market is bottoming here, in a downtrend the market tends to rally up through the night, and then the big guys step on it and sell down throughout the trading day. And this always happens in a bull market. In a bear market. The market tends to gap up in the morning so that the big guys can get a premium and they can get out of their positions or short at a higher price, and then it gets crushed. And it happens over and over again. You'll get these pushes up into the night, and then when the market opens it gets crushed. And that's just the way it happens. Like this one was a perfect one here the other day. We saw it drift right up in the night, right into the middle of a resistance level. We actually took I think it was that one, we took a short position. Oh no, maybe it wasn't. It was another one back here. We took a short. It drifted up into the night, and we went short and caught this draft down. But it just happens over and over again. Some depending on what the time frames are, it's tradable and not tradable. A lot of this stuff happens at one in the middle of the night, between like midnight and 4 in the morning. So it's not easy to trade because most people are sleeping. But these patterns happen over and over again. And what we saw yesterday, we saw selling through the entire night, pushed it below the low. It happened with no volume, and then it opened up, and then it looks like a bunch of big guys stepped in buying it up. And I think we're starting to get to the reversal, the trend reversal here. Right now it's trying to break this resistance level. We got the bull flag here. Problem is, this is where the risk comes in, is this could easily drop back down and penetrate this low here, and it'll shake everybody out. So there's several percentage points here of risk. If you were to jump in, if this starts to move up, you could, if you're very aggressive, you could jump in to chase it, put a stop somewhere below this spike low, and once you get into the money, move your stop at your break-even point, or hold on to it for a little bit longer. I do think we're going to get maybe a spike this morning as people panic in, but the prices have drifted up very strongly through the night, and we're still in a downtrend somewhat, so they could get stepped on again and we could see a push down. And the way I see this possibly unfolding would be, we've got this shoulder, this head, and we could get another shoulder down here, and that would create this neckline, and then we could see it move higher. So we might get this spike above. It's going to suck people in, and then it's going to get stepped on and get pushed down to form a shoulder here, and then we could see higher prices. So I think the market is bottoming. Momentum is starting to shift. We've had 2 big days of panic selling, and we've also seen 2 big days of major buying. So it's getting very choppy. This happens at reversal points. And so depending what you want to do, I'm not going to take a position here yet because we do have several percentage point drop to this low. There's a lot of risk, but that's what I see for that right now. Anyways, that's it for now, and I'll talk to you guys later. Bye bye.